So, yeah, uh, love to. I'll kind of go through the indicator a bit more. I know Bing went through it, and then we had like a day where it delisted stuff. Like in any case, everyone should have access to the indicator. It all works. This is the updated one. We put a couple changes to it. Essentially, the divergences is a big one. Also, we actually made the improvement on some of the candles to actually show some really interesting volume stuff. So we'll kind of go through that a bit, and I'll just break down each section a bit more just to help people kind of like who are using this, because essentially you're getting quite a big tool, the volume range, volume profile, or visible range volume profile with it. So, and then also the volume control candles, order book, all that stuff. So kind of starting at the top, the volume profile. I think we've gone through enough how to use it, but I'll just double tap it so we're all on the same page. The thing with the volume range visible profile is that what you're getting essentially is all of the volume in this zone. Actually, let me go to a fresh chart. Otherwise, I'm going to drive you and everybody else crazy. So essentially, volume range visible profile, you're getting the volume in whatever you're seeing on chart, and usually it's just a little bit extra to the side as well. So that's essentially where it's taking all the volume from. And the thing with the volume range, this blue line here is the point of control. Higher density volume shows like where the majority of the volume is. So in a sense, this stuff here is the most significant part of the move. Just because we've now done the move down, we've had a very big liquidity zone, and that's the center point of control on this entire upside move. So it's pretty significant. Again, what have we talked about quite a bit? What is this? This is a volume dead zone. That's below us. Volume dead zone means it's a range that that isn't fleshed out. So essentially, that's the thing that if we break the lows, where we want to target, probably back into like this structure down here, around 25K, and that makes sense looking at some of that structure as well. So a good way to use it, even low time frame, is that when you see major reversals, if you're even scalping with it, like 1 minute, 3 minute type stuff, you can see the point of control on volume and where that lines up with your key levels. Those are levels to, fail at, gain, reverse at, that type of stuff. So I like it high time frame and low time frame. Also with the divergences, this move down again, it gave us a bullish divergence on volume. And now this is going to be pulled specifically off of like the candle volume itself. So when you see these kind of like 4 hour plus divergences, I'd say these are the most important ones, because what you actually see with those volume divergences, that who's in control of what where. And then lower time frame as well, I think it's a little less relevant because you'll always see diverging volume going in lower time frame. But that really helps us get into using some of the other tools as well. So let me just put that on, turn off volume profile. Yeah, I'll do volume range, volume control candles. So with the volume range, essentially what you're trying to see with this is it's going to be giving you larger ranges where you think a potential failure. It's going to be helping to plot a little bit. You'll get some outliers like this where you have like basically a giant volume gap. Essentially, what you end up with these things is you have levels to target with the volume profile highs. So when you see these things pop up, there are some significant levels: gain, loss, retest. If we come to the highs, that type of stuff, the high here, this was the high in the overall that just continued to fail, that type of thing. So they're good to look to the left to be able to see where the major levels are. And I think they're pretty valid on most time frames, especially higher time frame as well. You'll see some more significant stuff. And the big thing there is kind of looking at distributing. When you have stuff based off of the type it is, so blue is essentially the bullish range. Red is a bearish range essentially. So when you have these things, you look, if you're above structure, you come back down. You want to see what we did here, right? We ran all the way to the low of that range perfectly, and then reversed up on a bullish divergence on volume as well. And using some of the other tools like the oscillator or things like that, you can really easily see that stuff. So. Also to the downside or to the upside, now that we're going back to the upside, we can see that there's also some structure here where we're kind of failing at. And lower time frame, we failed at the range we were kind of supposed to fail at, but it just nuked off because of some FUD. And Egil do you mind explaining that, Egil, what happened with the FUD real quick? Just so the people who didn't hear it at the beginning. Yeah. Yeah, I agree. It's absolutely crazy, and they're not going to be punished for all the people who got flushed out in this zone. So if you do get flushed out, I mean, it's part and parcel with trading, unfortunately. So yeah, that's the ranges as well, the volume range, just to give you some good perspective with that. The order books are pretty crazy one that I really like, just because what we get with the order books. This is actually an interesting one because it's showing essentially open interest data that we've used to combine volume and find actual levels where there's orders based off of open interest. So this is like, with the liquidation indicator, right? That's pretty good for finding big liquidations, like higher time frame as well, kind of targeting stuff. This is for lower time frame if you're going to be looking at liquidation levels. So when you have orders being actioned and filled, you'll usually still see them getting filled at right around the same part, to the downside as well to the upside. Big order block down here held the price back up. Same thing as what we're doing here locally. Couple of like low time frame open interest shorts built in. We still haven't lost anything significantly. And looking higher time frame as well, you can see some bigger stuff. The big thing there is that you can show all of the active, or you can show all of them, or just the active ones. I like to look at all of them because it allows me to see how it's actually moving. And a lot of times you'll see that this thing will grab all of the liquidity it can, and then basically fail at like a high time frame position, and then go back down and bounce on major holds of levels. So if you want to talk about like understanding where liquidity is overall in this entire structure, it's really simple. Where's the major short liquidity still? It's still here, right? It's still up to the upside. Where's all the major liquidity to the downside? It's still here. Everything in the middle is lower time frame liquidity stuff. And when you do have failures, right, when you do have blocks that are failed, what do you have? You get a big move down, because all of those longs, essentially, maybe it's, just play with me here, it's 10 million, right? 10 million in longs. For them to exit that position, the market effect that happens with 10 million longs getting liquidated, getting stopped out, is you get the minus. Essentially, a short value of 10 million is what hits the market, because that's how you get out, right? If you buy Bitcoin, your $100 worth of Bitcoin here, and you sell your entire position higher in profit, the effect is you're still selling that $100 at the highs. So same thing as getting stopped out. You have to exit the value of your trade to exit a position, and that's the effect on the market. So I really like it. I really like it even low time frame as well. Let me just check it out a bit, see if we can get something interesting low time frame for it. Will's been scalping the crap out of things the last couple of days, if you haven't noticed, with this thing, which is really cool. Really fun to see. Just the Bitcoin USDT perp has been giving me shit all day. Yeah, so that's essentially what we're trying to do with this thing is, actually, let me switch to this and then turn my stuff off. Yeah. See if I can get below the 15. Hello.
Noah.
Dude, for the love of God, what are you doing? Sorry, guys.
It's okay. Let's see if I can get this thing to load. It's been a little bit slow today. But essentially, yeah, it's the same thing with that as well, looking for those open interest levels. Pretty interesting. I'll go ahead and just move the volume candles, because that's honestly one of the more important ones, given what we've been doing the last couple of days, especially with finding some of these blocks. Essentially, what you're seeing here, and we'll have a session probably next week going into more detail with all of this. What you actually see here is that these things represent the majority of the volume of that candle. And when you have small spots, like at the low here, as an example, a lot of times this will show you when price is out of position. Like, how do you know stuff will go down, essentially, right? Well, a good idea is to look at this as like out of position, right? So if there's shorts here, and then there's shorts here on this major bounce, and that's the volume, but then it closes back above, and then the next candle is gaining, right? Creating bullish volume that is above these shorts, right? All these shorts here are now out of position. Out of position means that they're just, they're in net loss, essentially. And that continuation is what drives price to go higher. To the same token, to the downside, when you see things like this or like this, where you have, bearish volume controlling the high, right? Bullish volume starts slowing down. That's the high of it. You have bearish volume stepping in. Price closes low. Bullish it can't maintain, and then the next candle closes bearish down. These are like very clear signs, lower time frame, of failure of level. When you have even better conditions, like where you have the majority of shorts on a bearish candle at the high, and it closes down here out of position, what does that tell you? All of those people in shorts are going to get liquidated or stopped, because it's actually effectively looking against that type of price action. So when you see that like bearish, essentially in control there at the highs, and then moving back to the downside, that's essentially the reversals that you're seeing that are really highly usable. Same thing as like the bullish candle to the downside. Sorry if I was a little unclear on that. I think I mixed something up in there. But essentially, bearish control volume high pushes price down, right, as we close lower and lower. Bullish volume can't maintain anything, doesn't gain anything back, continues the failure down. The reversal to the upside happens when you have bullish volume essentially much below the current price action. Price closes above, and the next bearish volume candle can't actually, break that volume. Essentially, you're looking to long the structure of that candle until you lose that. So a lot of these things, I know that might seem a little weird. Sometimes you'll have things with very low volume, and that just means there's very, very low volume overall. Currently, like, what are we doing now, right? We've got some bearish volume. We've got some longs out of position. If we start closing under this, what do we have? We have longs out of position overall. And yeah, that's a great way to use it lower time frame. I know Will's been on the 30-minute pretty religiously with it. And essentially, this is the stuff you look for as far as being out of position. Like, how do you know you're going to pump? Is it bearish volumes out of position to the downside and we're closing above? How do you know that we're reversing? Well, when you see bearish, downside sell pressure coming in, and bullish volume can't regain that control of that candle. This is essentially, well, not essentially, it's not order flow, but it's like volume order flow in a sense. Right? You're seeing literally where, price is going up, bulls are in control, and this is every reversal. This happens. Bullish volume, long volume drops off, bearish volume takes command, and then you start breaking down and losing levels. That's all it is, over and over and over again. And this thing is going to be really brutal in helping us trying to, scalp and things like of that nature. Right? Again, at the highs that we failed at, people trying to short this thing early, it breaks down, and then eventually, the FUD happens, and that's just, essentially a black swan event. That shit happens. It's nothing really we can do about it. So the divergences as well, lower time frame, not super relevant because volume is consistently diverging lower time frame. It's much more relevant higher, like 1 hour, 4 hour plus. I'd say 4 hour plus for the divergences. Which again, it's the same as the normal divergences that we have on like the oscillator, right? We look for the 4 hour, the 1 plus, like the 4 hour and higher divergences. So really cool tool, and we'll kind of go on that a little bit more. And then session volume is an interesting one, because what you're going to end up seeing, if I go on the hour, it should break it up into different periods. And this is something we can do pretty interesting. We can actually see reversals of volume most of the time. Like again, on the 1 hour, it's a bit more difficult. And the time frame that we're putting it in, it goes from, on like the 1 hour, it goes from like a 24-hour period. If you go higher, you can do it to a week to a month. But essentially, what you look at in these volume areas, right, is that you're seeing, bullish volume, and then bullish volume start to lose momentum, right? A bearish volume starts to lose momentum. And the higher time frame you go with this thing, it'll go from like, I believe the 1 hour and stuff below that goes to the day. Yeah, the 4 hour goes to a 3-day period, Monday, Tuesday, Wednesday, Thursday. No, it's a 1 week period, excuse me. So yeah, it's a 1 week period for that. And then again, the 4 hour is pretty decent for looking at reversals of volume. Essentially, you're looking for this stuff, bearish volume. We're showing it up here because that's where it started. And then here you saw reversals where the volume couldn't get any lower than that. And then you see higher volume continuing. And that's that volume change, right? Essentially, is when you see the volume changing, this is telegraphing the move before it happens. Right? If right now you start seeing bearish volume come in and we're still kind of deviating, you're probably going to see some loss of level. Currently, you've lost the volume from the high, lots of bullish volume that blew off, and now you're coming back to the downside. But the more you look at this thing and looking sideways, right? Here's the high in the volume. We couldn't regain it even though we made a new low. Where's the direction of volume direction? Like that's some really easy stuff there. At the highs, what do we see? Diminishing volume, failure. Failed before, then moved down, essentially. And that's what we kind of want to look at. And then on the daily as well, I think this gives us the monthly outlook. I got to double check it. But yeah, it should be. No, it's still a week. I wonder if it goes higher. So I think it's at the highest it shows a week, and then if you go to the weekly, it should be a month. Let's double check it. No, it's a three-month block, I believe. Or 6 months. May through January. So it's just showing a higher period. I need to find out exactly what that is, and I'll double tap that for you. Yeah, so the weekly is actually showing essentially a year. If I let it go further back. So pretty interesting stuff. Even higher time frame, it shows, commanding bearish volume. The new year starts, we have very strong bullish volume. It diverges, and then we have basically running into a flat, much lower volume than what we had going back at the end of January overall. So I like it for the lower time frame, like 1 hour, 4 hour, that type of thing. And essentially, that's all you're doing is you're looking for reversals in volume, and you can use that, along with other things, along with the oscillator is great for it, that type of thing. So, yeah, I really like it. Anywho, I'll open it up a bit. It's not going to be a super long session today. Just kind of wanted to touch over this, and questions, comments, concerns about this or anything else, they're open. So if you guys got anything, if you don't feel like speaking, you can just type it in the chat, and I'll read it in the fireside chat. Yes, no, maybe so. Any questions about the stuff I went through? Any questions about using the different tools, the volume control, candles, that type of thing? Does anybody hate it? So we changed the delta part to now be session volume, and we've So essentially, they didn't like that we took some existing tools and we wanted to kind of put a package together for volume that really explains like what's going on for volume. The delta is essentially this. It's the session volume. We probably should have called it like the multi-volume tool or something like that, but it sounded pretty sexy with that. But the biggest thing, honestly, it's because it's all our own code. And we've recoded everything from like volume profile. I think they're just mostly mad because this is a different way to get volume profile and a couple other things, tools that you could only get through the premium version of TradingView, which is like $60 a month. So yeah, that's the only reason why they're pissed. So I talked to the guys, talked to like a back and forth message. So they were just kind of like stinky about it. So they couldn't publicly display the indicator, but I could privately do it. So that basically means it's still active, but it's hidden to the public. Everyone who has access and can use it, and that's all that matters at the end of the day. As long as you guys have access and can use it.
Don't they, since it's invite only, what do they care?
Well, because obviously we want more people to use the indicators, And if we can't publicly put them on like the community search list for people to find and look at stuff, it just means that now it's only hidden, so that you have to have access to even be able to see it and the description and all that stuff. So essentially, it's like a private. So there's two ways to list indicators when you build them. Is that you can list them public, and then you can, it's either public, or private. And that's public means the community can see it. Private means only you and the people who have access can see it. And then from there, you can be like open source, open protected code, or invite only protected code. And that's what we have on our stuff, since we put like thousands of hours into coding and everything. So that's essentially what it is. And that, again, they're mostly stinky about this and the fact that we made it improved delta. Compared to, I've seen a couple other cumulative volume deltas. This one actually just is more accurate because of what we put in, and especially with the volume profile, being able to see like by volume where is in control. You see exactly where price is. You see what blocks of volume you're in control of and which ones you're not. Essentially they just didn't like the fact that we were rebuilding their tools better and giving them out to everybody who had access. That's essentially it.
Hey, real quick, what does the big long dark line mean in that volume profile? Yeah.
So, good question. So the big dark line in volume profile, this is your POC, your point of control. Essentially, when you have that on chart, when you have that on your volume profile, that means the majority of the volume is in this area. Essentially, it's like that's the majority of the volume that you care about. And it's a very important block. The idea being that when you do actually, have tests at the point of control, and you can do this, lower time frame as well, what you want to see is price literally reversing at, or think of it like the same as a level. So if we're at like a point of control by volume, essentially, that's the level that you don't want to lose, because if you lose it, you're going lower. And if we go back to the upside, that's the important gain that takes you to volume in the other direction. Treat the point of control essentially like you would treat a daily open, weekly open, Q2 level, that type of stuff, because that's the majority of the control. Now, that being said, there's also peaks and valleys in the volume. So when you have stuff like here, we're essentially on a very big volume level right here. Let me change the color so we can see it. So we have a volume level here. We have a big volume level here, right? We've got some volume in the middle. And then, of course, the major thing is to the upside. So essentially what you get with this from major key levels of volume, even on like the 1 hour period, is that you get a pretty decent idea of like where there's rejection or where there's high volume of, say, bearish volume above us versus bullish volume below us. Does that answer your question?
Very much.
Chris,
yeah.
Got a question. Alex, you're good? Done?
Yeah. Go ahead.
Bitcoin, as far as the volume profile, you can use it on any chart, right? It doesn't have to be Bitcoin or Ethereum.
There are some charts that can't. If there's like indexes, sometimes are hard. Like the dollar currency index is sometimes difficult. Bitcoin dominances, I don't expect it to work on. It might, but yeah. It works on it's supposed to work on every single chart.
Okay. Got it.
Yeah, so all of the things that it pulls in are not specific. It doesn't just like only pull in Bitcoin or only pull in ETH. So we actually have it actively searching for the volume that's provided by the ticker. So it's pulling the accurate volume from that ticker and that ticker alone when it shows it.
Okay, that makes sense.
Yeah. I mean, exactly. You can just turn profile and POC. You can just put it on profile, and then it just puts the volume candle back to normal. So that's still the point of control. It's still the major volume in the zone. But what do you get with this? You now say like, okay, I'm on the 15. That's the major rejection. If we go back to the upside, gain that, go higher. Does this play out with my other levels? Yes. What are we doing now? We're farming out liquidity, especially, essentially on a major level that we have here. And looking lower time frame as well. And this is why the point of control is so good for us to be able to see these massive changes in volume. Is that we see that's where does that line up as a major level? Like, yeah, we're flipping it pretty wildly right now, right? And a lot of times you'll see that with the volume being represented, and it should work also lower time frame. I haven't really tried it on the 3 or the 1 at all, but it'll just take longer to load because there's more data. More bars means more calculations. Because what it's doing is at each bar, the output of information for volume output by TradingView through the ticker is always the same. Because like every 3-minute period, it'll report total volume along with the ticker, along with like it's not just like you're looking at the chart. There's a lot of data that comes in to be put on TradingView to be able to show this stuff. So.
Paper. Is it me again? Oh my god, I'm sorry.
That's okay. That's all right. I had it turned off. There you go. So there you go. There's like a lower time frame volume profile to show the visible range. Again, you'll see a bit of it's a little less effective volume profile, much very low time frame because the look back, it has to have a significant look back, and you can't go too far back. I do like the session part, like this session volume. We're essentially showing, when we have highs that break down, that's essentially showing the volume shift before it actually happens. So let's do a little experiment here, because I think this is a pretty interesting way to use the delta, the session volume as we have it written here. It's essentially a cumulative volume delta. So when you have like breakdown of that volume, you essentially have it right before you have the candle. It fires, lower volume right before the major nuke, or at the high here we have volume increasing, and then we have volume decreasing. Volume still increasing. It's starting to decrease a little bit, but hasn't lost anything major. And that's how we use it, or how I use it essentially, because it's giving you like the 3-minute time frame. It's going to continue updating to give you the most information that you possibly can get from it. But when you see like that type of reversal, or that, right, when it starts essentially breaking down and making lows, it's pretty significant. And then when you get the volume spikes to the upside, and then on the very next candle, right, it has very low volume. Well, the nuke's already happening. So there's a lot to happen when you see the spikes in the volume. We're trying to figure out a way that we can maybe create a moving average on this thing, right? So we can potentially look at like, oh, well, volume's diverging. Maybe we can get a short. That's something we're working on, but it's pretty difficult right now because it's constantly updating and it changes significantly for the bar. So manual's the way to go right now. But essentially what you get with that, high volume, reversal, breakdown of structure, it's continuing until proven otherwise. At the lows, you have a spike in volume, right? Reversal, volume starts increasing. Last dip, volume starts increasing, volume still increasing. So,
Chris,
what's up?
I got a question very quick. I was able to look at to play with this a little bit, and it was the divergences are about 75% of the time accurate. My question is something that it could be implemented into algorithmic trading using the multi-dimension volume delta,
So,
create alerts and such things, just like we do with the core trend, based off the divergences. No, I'm just trying to, it's the more the better, I'm just trying to see what, I'm pretty sure Alex is a big algorithm trade, and he would be interested if something that we can implement too.
yeah, so that's we're trying to make more alerts for it that are accurate. So currently the ones that we have are like really high volume candles, low volume candle, that type of thing. Volume range, bearish break. So if you have like one of those session volume, or if you have a volume range essentially, what you're getting then is that you want to see when you break out of it or break above it. So if you have a bearish break, that'll tell you, the potential dump before it takes out the major volume to the downside, which is pretty significant in the overall structure. So, even here, like we're trying to do it more as like what we can see as reversals, but how do you know that that's a continuation? You don't until the candle closes, or if it just closes above the block. So there's ways we've thought about doing it. Essentially, it's like, if candle closes bullishly with bullish volume below, then it should give you a signal. But the problem is that sometimes you'll get that, and it closes at the high, essentially where it's failing. And that's what we're trying to, by adding more alerts to it versus like visually being able to like make the adjustments in real time, we think it's more accurate that way. So we're trying something. We're trying to get more alerts to it. Absolutely. We haven't put in the divergent stuff yet, but just because. Yeah. Also on the low time frame, because like I mentioned earlier, the lower time frame volume diverges constantly. Because that's basically the majority of the market is moving in divergent volume because 80% of the people are wrong. But on a higher time frame, 1 hour, 4 hour, 80% of the people are wrong, but the majority of the volume is controlled by whales and institutions. So to think about that as like an actual number, right? And we've looked into this, we've talked with exchanges, we know that it's about 75% of the volume on exchanges is done by, high net worth people, big whales, that market makers, that type of stuff. Conversely, they're only, they're a very small percentage of the overall number of traders. So the volume on a higher time frame will definitely tell you where the moves are, but on a lower time frame, you can get faked out, especially with divergences. So essentially, you're looking at it from two perspectives. Like low time frame, it'll start going against, the majority of people will lose money. That's how the markets work. 80% need to lose money for the markets to work the way they work. And if they're not doing that, then essentially you're in an inefficient market and stuff's going probably pretty crazy. Or you're in a bull market, you're in a major expansion, or in a bear market, like a major downside, which is what we saw last year and what we saw in the bull market. So essentially what you want to see, with the divergences, with the alerts and stuff, is that they're accurate. And on the 1 hour, I think they're pretty accurate. And then also looking at the candle volume, the volume on candle, when you have major moves like that, and then price closes above and you're failing to break, like you're looking for higher lows for continuation. And then when you have failures, essentially where, bearish candle in command of volume closes at the lows, that's downside continuation. And that's because essentially what you're doing there is saying, well, whatever bullish volume was here, the people who were long at the top, that's when the breakdown started happening that caused this move. And then now we're having bears in control moving the price stack to the downside. What happens if we lose the block at around 28.7? Right? We're in a very low volume area right now. But if we lose that block, where are we going? Well, we're going back to the next major level, which is also the next major bullish volume. So looking at it from like the perspective of alerts, we're going to continue updating stuff and adding stuff. Absolutely. But this is much more of a manually traded thing because the data it gives, it's hard to quantify it. And like, essentially we would have to take all this data and then algorithmically say long here based off of this or short here based off of that type thing.
Just visually speaking, I have, sorry, Alex, I was looking at the charts, and if I could tell that, divergences, we have movement, and it's pretty accurate as far as the 4 hour, 1 hour. But I don't know if that's something that, but yeah.
Even on the 1 hour, I mean, that's the problem too, is that even on the 1 hour, we had massively diverging volume here in this whole structure. And then even we had bearish divergent structure, we essentially had the blow off where enough people were long and out of position to fail. And then now you're looking for continuation failure, right?
Chris, so, sorry, I got a question for you at the end of this stream. It's a general question regarding what you just pointed out. But yeah, if anybody else has and it was just, I need 5 minutes from your time at the end.
Yeah, no worries. It's volume. It's divergence in volume.
And
yeah, it should be. But again, when you get divergences on the harmony, if you're getting divergences in strength and divergences in price and volume, you're essentially seeing a massive divergence. So what does that mean? The next move up that fails is essentially giving you the level to lose. And I wish that we had this thing out like 2 weeks ago, because like you could have shorted the high pretty accurate. I mean, yeah, I called the short.
You said 30,000. You said 30,000. You know.
Yeah.
Very quick. Fuck! I lost my train of thought. Never mind. Go ahead.
Yeah, no worries. Any other questions about how to use this stuff? Some simple things. And again, will go much more in depth and detail with some scalping stuff.
Quick question: if you can be so kind and just slap on volume, just the regular volume out of with indicators, and you'll see that. Right there, that divergence right there, that big.
Yeah.
That's what I was able to do. I was just slapping volume, just trying to look at, okay, this is where things start to make sense.
Yeah, I mean, and that's the thing to do. Think about it like from a volume perspective. Like we're still in downside, like kind of bearish volume, comparable to what we saw back at the mid-March area. We've been in a very low volume comparatively. So even without using everything else, just using basic volume, you're seeing some more volume movements here, but you need to see an expansion of volume with price moving back up. That would give us essentially the next leg up, is if you start seeing much higher increases in volume without making major moves. So, from a higher perspective, an easy way to use just volume is to look at where is volume divergent. Like look at the bearish divergence on the volume. Essentially, every time we got a bearish divergence of volume, you had some downside. 2 of those 3 times that were recent, you essentially would have shorted the high for a major like 5K move down or a 3K move down. So essentially, that's the problem that you're having now. You had a relatively kind of like dip in volume. You had a massive expansion of volume, and then look at this high that we've made now. How many buyers above 30K are there? Freaking none. So you have very, very, very low volume comparable to what we were doing even in the bear market. So, what did it tell you? It means 2 things. In my head, it means a lot of people that bought, most of the people that bought are in here somewhere, right? And if we want to hurt the most amount of people, if we lose that low, what's going to happen? You're going to see a bigger increase in volume going down. Where's the higher time frame point of control? Well, there's one, obviously the big one, which is down below us, but we've talked about this level before, 23.1. That's not an arbitrary level, or 23K. That's a lot of volume and structure. So if we do have a breakdown, that's where we probably have to hold if we're going to continue to the upside. Otherwise, what do we end up having with all this trash? Well, essentially, if you lose that, there's a bigger argument to come all the way down, sweep the lows, test the high of the previous range, hold something like December, and not retouch yearly open. This still could happen eventually. Again, I'd expect there to be quite a bit of buyers if we get back down below 20K. I would be. It's spot buying, right? But at the end of the day, the divergences, you still need loss of level. So if you get the divergence, you're still looking bearish retest failure, move down. Bearish retest, did we get it? Somewhat. We got a little bit of a move down, probably about a break even, or maybe made some profit. Here you had the divergence saying we're diverging on volume. You want to see the failure, the breakdown. That's a continuation move to the downside. Then what do you get at 20K? Extreme spike in volume, massive longs coming in, and then a complete taper off as this big move up happened. So we're still in a volume flat zone. We want to gain above certain things on volume. Let's see if I can get a MA in there. I know, moving averages and whatnot.
It's a garage opener. It's the garage for the garage.
What?
It's for the garage.
Oh.
Yeah, go upstairs. Watch it.
So looking at this here, again, you can put a little moving average on the volume like the normal one. So this is just some extra data you can kind of use to kind of judge the market. Like this whole move above 28K has been freaking no volume at all. But what you want to see is if we do start breaking out, increasing in volume, that moving average should start going up. And we are above, we're at that volume moving average. So we want to start getting above it that would be a better idea of that we're going to have a bigger move. So it's not quite there yet. We need to see some more information. Essentially, when we start arcing up, making highs, essentially, 10th of January, it was going. There was nothing to stop it. Like, volume is diverging from previous to above the moving average of whatever. Again, I don't believe in moving averages on chart. I do believe in moving averages as a form of understanding volume, because now you can see where's the break in volume, essentially. High volume as we're going down, lower volume as we kind of crab up, increase of volume as we nuke, low volume starts increasing as price starts kind of moving volume higher. So it's a good way to use it. Again, it's not super actionable more than just to say, well, volume is high and it's increasing as we're going up, which means new buyers are coming in, which is kind of the whole point. If I were to switch onto something like, let's see if I can go onto the perp. So you're going to see a little bit of disparity from spot again to perpetual. And the reason for that is very simple, is that people who bought spot, they essentially bought in this zone here and very little spot buying in this area comparatively, right? Perpetuals, because you're on like a perp contract now, you actually still have increased volume. It's decreasing now, but we've had some big spikes in perpetual volume, even on the daily here. So that's a good potential sign that we're going to see some increase in volume overall. So is there a spread still? Let me just check. Yeah, so there's still bullish funding, which is nice. So still incentivized for moves up, essentially. Yeah, and stable. I mean, like even on the high time frame, like this is an interesting one, essentially. With the flow moving up, we're starting to arc up here with the daily trend. We had the flush out with the bearish divergence. So flows breaking back down. Stablecoin, people are getting less allocated and stable, even though that we kind of had the big flush out yesterday on a higher time frame. So that's good. We'd like to see stablecoin keep collapsing. It's still kind of in command by flow score, essentially. But as we see kind of the break up with that, then we can start looking into alts and things when they actually start moving, but they're still making new lows. I love the flow thing is crazy too. Like, look at that. You essentially had the, put my cross on. So you essentially had to move up here before it actually, like you had the breakout where we had, very increased movement up and very big movement down from the stable coins before the actual big move, So that's pretty interesting. It's pretty cool. And that's essentially how we're using the flow, which is it's breaking down. We're seeing correlation changes. Yeah, and even on the 4-hour, you've got bullish div on the volume. So we'd like to see some continuation until we lose something important here. Lots of good data. Any other questions about stuff?
Quick question.
Yeah.
Completely off topic, though.
Go for it.
Has anybody had a chance to play with that? I think it's called PTA website. It's that Trading View to Anywhere. Has anybody had a chance to play with that yet? No?
No.
What does it do exactly?
It's because of the May 8th situation coming up and living in the States, I'm about to get screwed royally here. I've been having to do a lot of research on how to continue trading, especially in the futures realm. So I found this Trading View. I think the website's tradingview.to. And what it is, it's basically a webhook service exactly like Wonderbit. The only thing it's missing is that it doesn't have a fancy UI like Wonderbit does. There's no bots or anything. It's very simple. But it acts and works exactly the same way. You set an alert in TradingView. service triggers your exchange. It's that simple, and there's no lag time like Wonderbit does. So I was playing around with it last night. You guys should check it out because it's a fraction of the cost of what Wonderbit charges. I know I've got the Pro account on Wonderbit, which is like $360, and 15 bots, I think is what it is. But this one charges by the amount of alerts. So I think their basic plan is like, I think it was $70 a year, and you get 500 alerts a day or something like that. So it's, I probably trigger, I don't know, 5 alerts a day. But yeah, that's right. There's no interface. It's all done with the code inside the alert. Yeah, right. Wonderbit actually has, it's bot based. Like you go into your website. Right.
Why can't we just try OKX, Alex? I mean, right now OKX, there's nothing going on.
In order to deposit on OKX, you have to provide an address.
Oh, that's what I was asking Viking yesterday.
Yeah, I tried to get an OKX account, and I can't do it.
KuCoin is still fine for now.
Yeah, KuCoin's fine, and that's why I was interested in the TTA website, is because it actually does KuCoin futures. So you can trade KuCoin's futures using TradingView. And that's why I started playing around with it, because I know after May 8th, this is going to be the only outlet I've got.
Do you know why May 8th special?
Yes, I'm doing it right now.
Okay.
Yeah, so there's still going to be some options. Also, there's another one you might want to look into called AutoView. It's actually a Chrome extension that you pay for. I've used that for some of our high-level bots that we do. So it's a pain to set up. It's not super user-friendly comparatively to Wonderbit, but it is another option for now. Yeah. So there's some other ones. I don't know. We've been approached by another. I'm going to start testing it out probably over the weekend. MEXC, MEXC.
Yeah, I've heard about that too, MEXC.
So I'm going to start doing some research on that stuff, and then also looking. I'm just checking CoinGlass real quick.
Another off topic. I know you were guys planning on having TradingView stream cuts a little bit. Is that still in the works?
You mean like short form versions of the of the streams, like more bite size?
Yeah, right.
Yeah,
but more fireside, correct?
Yeah. So we're basically gonna take the normal streams and try to keep it down to about 30 minutes, 45 minutes, like max, and then start doing at least 2, maybe 3, 4 firesides. And we've got some other guys coming in, like Smern's gonna be doing quite a bit of like on-chain stuff as well to help out, and then we've got a couple other guys that we're looking at for to help with basically indicator usage. The only issue with that is I'm actually expecting my first kid here in the next 3 weeks, so there's gonna be about a 2-week period where Will's gonna be on here and kind of running the show for about 2 or 3 weeks at least, mid-May, somewhere around there. And then after that, we'll get back into a good cycle.
Congratulations.
No, thanks everybody. I appreciate that. Yeah, no, I just, I didn't want to, never really said anything or mentioned anything just because it's like whatever, but, I'm going to be away for a while.
Prepare for no sleep for like 6 weeks.
It's the worst part. Oh my God. They think the baby love is sweet. Just wait. Yeah. Wait until 6 weeks? Oh, you got it easy.
We're prepped though, man. Like we've got in-laws, like my in-laws are driving up to Sweden, and we've got, a big support system. We got our neighbors who've got kids, and
is it a boy or
live down the road? It's a boy.
Oh, okay, that's good.
Nice.
First one is a boy. That's nice.
Yeah, well, I mean, it's like kids are like pancakes, right? The first one always comes out wonky. So
I can have more. I can tell everybody. More. One is
Yeah.
I mean, don't start popping in like popcorn. You better stop. One is enough for at least 5 years. See how it goes. They're expensive. I don't know about Sweden, but in here, oh my god.
But it's pretty crazy in Sweden. Like the nice thing about Sweden is that you get like combined like 18 months worth of parental leave for the.
Wow.
Yeah, it's like 400. It's 440 days that you split, I think, between
Alex,
the mother and father.
with Noah, the wife went back to work after 6 weeks, and I was stuck taking care of him. 6 weeks old baby. I don't know if it's 6 weeks. I don't remember. Yeah, it was a nightmare. I never want to go through that again.
Know that.
I heard a little something. Are you guys still planning on doing little? I think it's a great idea to do some Sunday streams before the pre-market opens.
So that's something we're also looking to bring back as well. Again, like more of like the content of just bringing back. The more we can do, the better. So we've also got a guy who's going to be helping us basically create shorts. So the idea being now, like in the next like week or two, we're going to farm out the documents and start fixing the documentation. So, and with that, we'll also start recording understanding and use of the indicators. It's like each little section will have a little like 30-second, to 2-minute video explaining like, the Fibonacci of the auto charting tools or the SRs and what is it doing, that type of thing. And then once that's set, then the plan is to start forming just blasting content. So we're going to do shorts. We're going to, start posting, TikToks and Instagram and, essentially just posting actual levels. Oh, jeez.
And another thing, Chris, this is just my idea. It's just trying to think outside the box. You do not have to necessarily wait for have a set time for everybody to be here. If it's easier, well, I'm just talking about the extra ones. It's nice to have the open sessions like this. But whenever you're bored at home, you can always just record something and throw it on the chat, and we can check it out.
Yeah, so there's a couple ways we've looked to do that, like maybe doing looms. Loom's a pretty easy thing to use, but yeah, we're trying to figure out some way to like save them so that Egil's being nice enough to record these and put them up on like a private YouTube server essentially.
Yep.
Which is nice, but I think the real value comes in as like building out a library that you guys have access to, and the only way to do that is to build out like a library section and put it on the website, essentially.
Yeah, or maybe Trello could work for you. I don't know.
Yeah, I've used Trello before too. I don't know. I'm just trying to the easiest way to get that kind of data out there, but then also making sure that this stuff only works. Essentially, what we do in the markets and why we can like make money doing what we're doing is essentially because the majority of people are wrong, and they don't know. Most people who trade literally don't even know what they don't know, and that's essentially it's the double-edged sword. Essentially, like we really want to help as many people as we can, but if you're like one of these 300K plus sub guys on YouTube, some of the stuff doesn't start working. It doesn't keep working because if the majority of the market all of a sudden starts using
the same strategy.
Yeah. It's still a drop in the bucket. Like even if we had, 10,000 people using the indicators, it wouldn't. But you get everyone starting to trade, and this is something that has happened that we've seen, right? Technical analysis and the use of stuff will change over time. Even now we'll see a lot of times what we've seen, especially in the last bull market, the last 4 years or so. A very big change in liquidity grabs being very, very deep, very, very nasty. Basically, before the last bull market, there was an indicator called because all of the stuff here I'll show you is actually really funny. I think it's neobutane. This guy makes good stuff. Premium Funding Index. Yeah, so the BitMEX funding, this thing here, we actually used to just trade this thing. Like this was literally the strategy that we had, and we were just trading this because back in the day, in the bull market, or in the market back in pre-bull market when BitMEX, before they collapsed and they had this big scandal, you could literally just trade the funding. So when you were trading just the funding stuff, as soon as bearish funding's in place, you're still looking for shorts. Funding flips bullish, you're looking for longs. That's essentially all it is. And like we would do that all day long because you could just trade the funding. You'd make money both ways. You'd make money providing liquidity to the market, and then you'd also make money essentially in the trades going the right direction because they controlled that one exchange was the majority of the market. Then Binance comes in, then Bybit and all these other ones, and Binance pretty much holds the control of everything, right? But at the end of the day, that's still it's less relevant now, and we've kind of fixed that with the collated fundings, right? This is why if you could trade funding, essentially, when you look at reversals of funding, this on a daily time frame, most of the time, this will show you moves before they happen, right? Reversals in bullish funding essentially means the move is going to be moving back up, and you're looking for higher low. Bearish funding steps in. When it starts retreating, that's the continuation. That's all it is. And like that's why we think this thing's powerful as hell, like especially high time frame, right? When you said massive bullish funding and then you hold the level, funding gets pulled and it's actually neutral above it. I mean, essentially the last chance was to hold it down was back on the 3rd of January, and then they pulled all of the funding completely as price started expanding. So essentially you're counter trading the moves. When you have like bullish funding really massively, you're looking for the low, and then you went along the higher low as funding gets pulled. When you're looking for shorts, you're looking for bearish volume or bearish funding, and then you're looking for the high and then shorting the failure. But you don't get failures. When you don't get failures, you have continuations. Like here, this is part of the reason why Will and I were going absolutely crazy, longing the shit out of just 19K essentially, right? That like every incentivization for longs was in place, everything volume wise was in place daily. I mean, look at that, like that, even from that, when we're seeing like the reversal low time frame, the 11th of March, massive bullish candle, all the bears out of position, strong volume all the way up, and that's essentially just what happened, right? But high time frame, it's effective. Now we're going to be tying a lot of this stuff into everything. But the oscillator still plays as well. I know you do this, what's it called, the Egil? Inverting the scale. This is actually, the more I look at it, the more I kind of like it, but it's just like it's a little bit too late. If you keep it in... Yeah.
I apologize, guys, if there's a lot of background noise from my...
No, it's okay. It's no worries, dude. All good.
No, Egil, I promise. After this stream, I'm going out. I need to get this cable for my 3rd monitor, and I'm buying noise-canceling headphones. I just can't do this to you guys.
Thanks, man.
I know. It's just with the kids, when you put the headphones on, you kind of forget about yourself, and they will set this fucking house on fire if I forget about them for 5 minutes. I just want you to know, guys, I'm very sorry.
Don't be sorry. It's okay.
Chris, I have another general question. Go ahead, Alex.
I said I just locked my kids in a rubber room.
It's maybe illegal in Texas, but not here in Ohio. Yeah, Noah does.
Oh, yeah.
Yeah, not Mason so much or Nikki. That's what I'm trying to tell Chris. Just one and done.
Nah. I live out in the woods. I need a flock so they can do shit. So when they're like 10, Oh yeah. So when they're like 10, 11 years old, they're gonna be like, "Yep, what are you doing this summer? I'm farming for dad." Yep, have fun. No, sir, none of that. Oh, there's plenty of people. I know people. I know people who do it, man. But it's just not worth it. Like I would never want to risk my home or anything like that. It's just absolutely not. But like, yeah, there's people who do it all over across the north in the summertime because you can just go in the woods. Um, I mean, like the vast majority of the country is in the woods, so you can just go do that stuff. It's not the best conditions, but I don't know anything about it. Oh yeah, but I've never. That place is dirty. Like I wouldn't go in there. Ugh, you're gonna get like stabbed or something. Yeah, yeah. It's I don't know, not my scene. And now it's like young drug dealers who want to make money. Oh, we had the pop final. Yep. So we popped the liquidity to the upside. Priority was up. This was the hope. Yeah. That's we had some bots that caught the move up and then they got stopped out in the move down. And they were up like 5%. They ended up being down 1% when they closed them. But still have a decent chance to continue. Essentially, there's quite a bit of liquidity here. Anything that's short in this zone that's not taken out, that could be the move up to go to 30.3. And that's the failure higher time frame. That if you get the failure, then it's done. But if you get the gain of that, that's what runs to a new high. And that measures out like across all of like even like the my normal charting and stuff. What's the flow looking like low time frame? Yeah, there's just so much data. Like, yeah, even here, like you're seeing a flip of the stable stuff, so it needs to continue. Yeah, it's good. It needs to continue here. Otherwise, it'll just keep reversing. That's a significant structure. I still want to see the flow like above like 9 essentially, and then that should be an expansion up. It's not quite there. It's getting close. Oh yeah, like essentially it is breaking down. Like yeah, we could see what happens. I don't know. There's been another couple thoughts I've had about it, like regarding the high time frame. If we get something like this, so essentially, my idea would be something like if our major breakout of structure is somewhere around here, and then we get that move up, and then we fail like 30.5, or actually probably this, somewhere like there, like right at the high of it. Then my idea kind of plays out like this, which is, if we get this move, and then we come back down, and then that move, and then come back down, like essentially what we're doing is creating higher lows, squeezing into a point where it's essentially the reverse bouncy ball, right? So if we invert it, going back down until eventually the breakout happens. And that'd be great if we can get it, but we need those. We just need to start testing it now. We're probably not going to break through 30 on the first one. I'd be kind of surprised if we did on the first try. To be fair, if we do anything here, essentially you're just looking for the failure to come back down. Probably retest lower or something really low and nasty. But actually, you don't. You've already done it. Like, you don't need to do it. So essentially, hold something high, right, and then come back up, fail that. And then what you end up doing is that now you're lining up liquidity for the pop to the upside. Oh, yeah. Well, I mean, that's the thing. It's like people, we talked about the FTX thing, like what price action could have been. Essentially, what would have happened on this, right? We had this move down. All that we think about happening here is that price would have come back down. Essentially, kind of move back down, and then we hit a grind back up, and then move back down, and then a big sweep to the upside, right? But we had a breakdown, so and this already happened. So we've done that move down in the same sense that we did this move down and grabbed all of that long liquidity. It's gone, right? All of the stuff from here is gone. So where's the major long liquidity that's left? There should be some lower leverage stuff back here, maybe at these lows. All of this stuff up here, I mean, yeah, it's a 14. Yeah, all the liquidity, all the long liquidity is probably gone outside of anyone who's like 2xing or 3xing long, essentially. So, I mean, all of the long liquidity that's really major is still in run zone. If we want to flush all of the major long liquidity, we go back to the downside, and that plays out pretty much with liquidations, and then looking at the block, we've built up quite a bit of liquidity above us. That'd be a nice thing to break out of. At the same time as if we do break the low, where do we have the major liquidity pocket still? Basically, all of this stuff getting flushed, all of these lows getting flushed, taking us where? Pretty much down to 25.1, and then you've got like a little bit, and that's pretty much done. But I know people don't use it a lot anymore, but the bands as well to target actual kind of structure levels. So the move up, it wrecked all of the shorts, even at the 10x shorts, right? And that's where it failed. So what we've been seeing in this upside move, outside of like the major expansions that were breaking the 5x longs, is that now we're going back into the cycle of the 10x. Go to the 4 hour, look at the 10x moves, bang, failed, and then basically down. And then essentially the bearish retest of the center line has the continuation move down, and that's also the failure of the low. So when you see stuff like that, it's pretty clear. What about this liquidation slide here? Like we did the 4 hour. We slid down, tested everything, closed back above essentially the point of control for liquidations to move back to the upside. And for this to break out and start doing major expansions up, we could be targeting stuff like 32 if it wants to start doing a bigger move back to the upside. But we haven't gotten it yet. Essentially, right now, with what we've done, we're still looking for failure potentially here, or going a bit higher and then failing to come back down. And at that point of control, if we do something like this, it should be around there. That's where we want to hold to potentially start breaking out. But yeah, I like the liquidations for that sense. But the things that hasn't been punished, obviously, is like 10x liquidations. Right? If we do flush out to the downside, right, breaking through the 20, that stuff here, if we want to do a major grab of liquidity like 5x shorts like we did here, what does that take us? It's essentially doing that move, but in reverse to the downside. So, which oddly enough, it's kind of looking similar to this.
15 minutes bands or with the 3 little dots liquidation are just amazing.
Oh, you mean on the core trend?
Minutes. Yeah, 15. No, not core trend. On the liquidations, 15 minutes. I'm sorry, core trend. On the bands, when you use bands. You showed us like a couple weeks ago.
Oh yeah.
Lord, 15 minutes. The 15 minutes is like the scalp, and it cannot go wrong. Well, it's just before the. Yeah. What?
I was just wondering when you were going to go.
In about 30 minutes, I'll be out of here.
Okay, because I wanted to run this.
I'm sorry, Chris. Go ahead, buddy. Yeah, that's the one I'm talking about.
Yeah. No, I haven't. I haven't looked, but that's a good point to bring up. Is that the options are expiring tomorrow? The monthly options. Yeah. So that's always a good thing to remember. It's the last Friday of the month. Options unlock, right? Monthly option, and then quarterly, it's the last Friday in the quarter. Yeah, that's pretty
Plus,
simple.
you said something about Sunday, you being glued to the screen Sunday night.
Yeah, well, I'm going to keep an eye on it. I'm going to a party. We have our neighbors are having a celebration. We have in Sweden we have Valborg, which I don't know if you guys have it in Norway. Essentially, we just build a big bonfire. It's an old pagan tradition back when we used to burn witches. Yeah. Yeah. So that's a big thing on Sunday is Valborg. It's yeah. But you,
Are you gonna bless us with your presence Sunday?
Oh, I gotta run, fellas. I'll see y'all later.
yeah, have a good one.
Are you gonna bless us with your presence Sunday night for a little stream?
I don't think I'll be able to. Like I said, I have my have a what do you call it? A thing to go to. I'll probably be keeping it on my phone though. Unfortunately. Just call it like like multi new indicator MDVD walkthrough, and then I don't know, indicator and market Q&A, something like that. But yeah, this thing's pretty powerful, man. Like combining some of this stuff together, and then maybe flow. We're seeing expansion, so we can move that down. Like
Just look at the 15-minute. It just well before the move from yesterday, the fuckery move, but before then the 15-minute. It's just I keep looking at it. It's just amazing work.
I mean, yeah, it's
Especially when you have those three little dots that you talked about.
yeah, the three little yellow dots, the liquidation. Yeah. But yeah, I mean, here it's like you have expansion volume. Still have a bullish candle. If you close the candle bullishly here, you should see some reversal. If you close it bearishly, if you see bears stepping in, essentially. But yeah, I mean, the bands are pretty nice because we use a lot of balancing with like the three major ones. So we actually put them in there too if you just want to use the normal ones, the normal bands. So this is basically we take Bollinger, Donchen, and Keltner bands and we weight them arithmetically to get like a better version of that. So essentially, it's almost like it's almost giving you a little bit of an Ichimoku cloud, but I'm not really a big fan of that stuff. It's just it's a lot of fluff. When in reality, like this tells you everything you need to know for scalping. I mean, you've got the low, you've got bullish funding, you've got oh, it just broke on me. But you got that, you got the low, you've got the failure at the high, yellow dots, blue, looking for continued failure until you break that high. You got the volume. This thing keeps breaking. What is going on? Did I change something? And then core trend just broke on me. God. Sometimes it's like I don't have enough processing power and stuff breaks on me. But yeah, essentially what you're getting here is quite a bit of data. No, I run everything off of like a high-end gaming laptop because like I travel with it and stuff. Maybe we'd have to get a lot more income coming in for that to happen. But yeah, this looking at this, like again, you can use this. Basically, saying you're seeing some people trapped in out of bullish volume. You're seeing some reversal here at the high. You're also seeing a major block at the upside as well. You're seeing not yet, but getting close to like if it's going to start swinging down. You want to be on par with what it's already done. So your high confluence trades are like that obviously. Major swing point failure, moving to the downside type stuff. Move down, hold at structure, reclose above major level, bullish continuation on the MDVD, that type of thing. So a lot of confluence in these zones. On the session volume. Not that I know of. Let me just check. I haven't actually tried to change that. I just changed them to like red and green, so you can see it quite a bit more there. Yeah. Yeah, it doesn't usually show it unless there's like a major move, essentially. Yeah. Yeah, but I don't know. It's scary how many people only trade on their phones. The setup that I've seen actually work for some people, and this is like some market research that we did like a year ago or 2 years ago. We actually found that like 2/3 of people trade on their phone, which is wild to me. Only on the phone. Yeah, and like I've also seen some people like they'll have their phone on like a little prop thing in front of them, so they're smashing buttons on their phone while watching TradingView on one screen and like on their phone. I'm like, that's just, I don't know, that stuff worries me. But like the only time I ever trade on my phone is if like, you know, Will gives me a call and like he says, hey, look at this, or you know, one of my other friends or something, or they're gonna do some market making shit. But usually that's like not price action based stuff where it's just kind of like, you know, hey, I heard so and so is gonna talk about this coin on their stream or something, or somebody just mentioned this coin and like it's still not listed or it's about to list like in the next week, and that's like some extra stuff essentially. It's like we have big projects and you look at like what's releasing for access on Binance and Spot like that. Essentially any new coin that releases in the bear market, you look to buy it before it releases, and then the moment it pumps, you start selling like a madman. There's no TM coin coming. Like we've talked about, like it's funny. We even talked about it, and we talked about some people who would be like, well, you know, we'd love to, you know, invest in the company, do all this stuff, but we want crypto coins, and it's like, well, it has to have a function, and otherwise it's just a shit coin. So like, if we can maybe do it where the coins themselves are, maybe if we build in some kind of automation system on our own website, maybe we can do something like that, where the coins can then be used as, you know, discounts for, and like a part of the actual firing of signals and shit like that, or if you hold it, you get, I don't know, there's a lot of stuff there, and I just like, what I don't want to do is like, yeah, but see, like that stuff, that's like, it freaks me out because it's like, that's like it seems unfair if to do that to users, and it's like, yeah, you can use this great automated system type thing where we have like stuff that plugs in and you could just action API, you know, bot trading. But the problem is that, you know, now you're making it harder in an extra step where people have to like buy your token when it's like it's the same freaking difference. Like in my head, I don't want to make it more difficult for people because that would make me mad. So like if we if we do something, it has to be entirely based off of function.
Well, there is a lot of you still got a lot of time. It was just in the beginning of this whole cryptoverse, and I don't think having Trendmaster Exchange or token is not entirely a bad idea. You know, just think about the adoption that's coming in.
Well, to be fair, like I wouldn't want to do an exchange. If I did, it would be a separate company, and even then, like I'm just not for it right now. There's so much you got to do with regulation. You're better off actually just building bots and like that can connect to exchanges, That's
Oh, yeah.
that's
Speaking of-
that's what I think. That's what I think is the better plan, anyways. Yeah. It's like I don't even want to compete in that. Like, essentially, the thing you want to do if you're not already in an established exchange is to work with banks to build those systems out where that people can onboard, but that's like an entire different process. Or from my perspective, it's like, why don't you just skip all the regulation and oversight and just push stuff to exchanges. So, oh yeah.
Speaking of,
Yeah, it's the same as crypto.com, like the mobile app. You can buy, sell, spend crypto, you can do all that stuff. PLU is good for that as well.
uh, another thing, are we allowed or not allowed? I don't know how that works, but you guys should start selling like the most profitable bots. You know how we go to on KuCoin or Gate or Bybit, you see how some bot trading where they make 10,000% and things like that, that you pay a fee of your
Yeah, but like the problem is that like those things.
do a fucking Trendmaster bot, like, Trendmaster bots where like on a daily time frame or 4 hour. You can never
Yeah,
go wrong with that.
the problem is that even with the bots, like I would rather have it as this is the strategy that's being used. Like I think the copy trading thing is a good, like a step in the right direction, but it's still scammy as shit because you don't know how these people are trading. They're essentially just like they'll write something funky in the description, but you can't actually see it trading, which means that you don't know what's actually going on.
Some people do not care about that. All they do, the copy trading, is just think about it as Trendmaster extra income. When you have the most profitable trades, you already know the system. You can even put the description underneath whatever you want. But we already know the system. It's based on core trend. It's based on this, based on that, and you put it on across all exchanges. And I'm pretty sure a lot of people would just jump on that without having to learn. You know what I mean?
Yeah, I mean, essentially, we were kind of exploring something like that. What I don't want to have happen is, something bad happen and then people are on it and they're also members here and then they lose money on that, which is why, like, what I don't ever want to do is, like, put a risk for people who are, like, already part of the team and now they're, losing money if something happens. Like, that to me, like, I don't want to ever put ourselves in that position where, we're essentially losing people money. Which that's the way you kill a business. That's the thing too. Like, you can't limit other people. Yeah, exactly. So like, there's stuff outside of the control that you can't do.
That's why you put disclaimers, and you let people know.
Yeah, they don't even. I mean, nobody reads anything. If it's in, yeah, unfortunately.
I mean, just take me up an example. I used to always 100x cross leverage. Now I don't go above 10x. Some people are willing to change their mentality because there's a lack of education, I believe.
Well, yeah, but that's the majority of the market. Like we've actually done the market research on that with the indicators, and essentially, people who want to trade, like they start trading essentially, and then they buy an indicator, and the majority of people who buy indicators, they don't bother to learn how to use stuff because there are good ones out there, not just us, but the problem is that the majority of people don't use them. So what happens is they get flushed out and then they go try something else. They basically come back around, or they get flushed out and then they're exited from the market. Very few people like use indicators at the same time as their plus learning essentially to then become like a profitable trader. And that's like the biggest problem, is that nobody's actually indicators are great and they're a great tool and they're Confluence and it makes shit easy to trade. Absolutely, I use indicators all the time, but at the core of it, it's price action based trading to me. Like, I mean, here's an example. Like, we even talked about, like, hey guys, looks like we're reversing a little bit. We're coming back down. I literally called it 5 minutes or 15 minutes ago, where we said, hey, we're reversing there. We're now closing underneath all of that long volume. Where's the expectation? down until we, if we lose that, if we regain the point of control, regain back into the long volume, then we're good to come back and test higher. And like
even the bands, the 15 minutes band showed it right there. It was done.
Yeah.
You could have scalped it right there down from 29.5 to all the way to 28.9 now.
Yeah.
I mean, that's what I'm saying. Like, there's some people you can just put it, hey, this is what we use, this is what we use, this is what you use. Take it with a grain of salt. And, it's really your decision to act on it or not. Because I just think a lot of people are using copy trading. I'm not talking to you. And we have a great system. And, some people would be very interested in it just because of the lot of data, a lot of information that you get from multiple indicators. Just a core trend alone that triggers buy and sell orders.
I mean, yeah, that's a lot of it, right? Let's go down here on the degen timeframes.
Yeah.
Well, that's the thing. It's like at the end of the day, unless there's like 100,000 people in the community here, there's very little chance of us being able to affect the markets. Like, with the amount of volume people have. Well, yeah, but I mean that's the thing. It's like they're user. That's the thing. It's like these people that like that, and that's why I don't want to do that. Is they make their money off of their people that follow them. So they all do the same thing. They say like, use my system, use my codes, and then trade high leverage. Oh, I'll shill this coin.
Yeah.
The way they operate is the exact same way as those like shitcoin, like the Telegram pump and dump groups, which I'm sure you guys have seen. But it's essentially the same thing. Like the influencers, they get money essentially from. So you have like, the shitcoin developer, right? They approach the influencer and they say, well, BitBoy, show my thing. And if you look at BitBoy, they have public releases that they put out to people of like, you want us to do a mention of your coin positively on our stream. It'll cost you something like $35K. I think that was a couple months old. Yeah, exactly. And then how they get that payment is, well, we can pay you in the token. So what's his objective now? If he's getting paid $35,000 in the shitcoin token, he pumps it to his. He basically says, okay. So the influencer then takes the money in shitcoin. He then pumps the token, and then as it's pumping, the influencer and the shitcoin guys are selling. That's why you essentially get shitcoin that's going sideways, and then all of a sudden it starts pumping really, really hard, and then it swing fails, and then everybody's like, oh, it's still going, and then this is literally where everyone's selling. You're literally buying. You're buying. Yeah, everyone who buys in, oh, it's a little bit down, I can catch it, and we can make a new high. Essentially, you're buying your exit liquidity and then the token goes below the previous level. It's essentially an inverted V bottom, which is what it does. It's a V top, essentially. And that's the same exact system that like those Ponzi fuckers, the ones that do the pump and dump tokens, they basically, it's like, the pump team has the token, they, accumulate it because it's very low volume over like 2-3 plus weeks. And then they sell that to their premium guys. So these are like the pump and dumps. Then they sell that data like to their premium guys, right? And then about 5 minutes after they sell it to their premium guys, so like these guys have a chance to smash longs essentially. Then they release it to the public. The public, like the normies, basically the plebs essentially. And that's what happens. So like it goes pump team to the premium people who already pay these guys, to the plebs, and the plebs are all exit liquidity for both those guys, both of these two. Yeah, I mean, you can make a shitload of money off of it essentially if you find a pump, but it's not like good trading. It's not. Oh god, this thing's rejecting.
No, it's funny that we're not a bunch of assholes. Remember,
Yeah, yeah.
we think about we think about, hey, if we do this, it might affect some people. Some people might do the wrong thing. Some people just do not give a shit. I'm talking about the guy that I came from, high leverage. Use his link. You must use his link. High leverage cross with no fucking education whatsoever.
Yeah.
Why? It's beneficial for him.
Because you're the product, essentially. You're
I am the product. Yeah, I was the product,
Yeah.
and it's just beneficial for him. What about me? I just keep getting liquidated, losing money, which is good for him.
That's the thing, essentially, because they make trading, because the way trading fees works is that, like, there's ways you can say, just use my link, and then they don't get anything back, but most links you can be like, okay, give, Binance, give whoever's using it a 20% kickback, or, Bybit or some of these other ones, you can give kickbacks to whoever's using the thing, which is how you save them money in the first place. You'll still get it, but it's still a shared thing. You still both win, essentially. But and that's the thing too. It's like high leverage. If you're using high leverage, like, you're paying fees on the total value of your trade. So, like, if you have $100 and you're 100xing, your trade value is essentially 10,000, and you're paying the trading fees on $10,000 on a position. That's what you pay trading fees on. That's why, leverage, look how much more money you have. It's like, you don't. Your trading fees for, like, that amount of money is a significant amount of stuff. Like, we've run model tests, like, even like with Bybit, you have to do, like, I don't know, what do we do? Like, we did like 5 million in trading volume, and you only made about like a couple $100 off of trading fees. But the trading fees you pay at high leverage are like 10 times higher than the trading fees you pay at low leverage. And you pay that again on the total value of your trade. So when you exit out, you could be exiting in profit, and you might only make a small amount of profit because the trading fees are so much higher. It's wild, but yeah. I mean, I don't know. So OKX has really low fees comparatively. I'm pretty happy with OKX with the fee structure. It's pretty decent.
I even like their platform too. It just sucks the US. We can't use it.
Mm-hmm.
Make sure if you refer any other exchanges to put the reference link, because that's important.
Mm. Yeah. 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 That's the thing that I'm worried about. I've heard some decent things, but I'm gonna go. I've been approached. Like, we've been approached by like their partnership program, because we do have active partnerships with like 5 exchanges. It's all the top 5, like Binance, Bybit, BitGet, OKX, and then we also have FMX.
Make sure you tell them that make sure you tell them that we have to implement Wonder Trade and webhooks and stuff, because without that, most of us use bots.
Yeah, exactly.
I don't think Mexi allows it uses Wonderbit for webhooks.
They've connected to Gate was the other one I was kind of interested in.
Gate.io, I love it.
Yeah, so that's the other one we've talked to as well, but they have it for Mexi on Wonder Trading, Mexi Global on Wonder Trading. So I'm gonna look into those two.
Yes. No, for bots. No, Okay, I think I misunderstood. Yeah, but for the Mexi, I don't think you can plug in the bots to on Mexi Exchange. That's what I meant to say. No, you cannot. It's not supported by Wonder Trading.
MEXC?
No, it's not.
Yeah, but MEXC Global is WooX, Gate.io. They've just released them. But that's what their website says now. Like I said, I'm gonna do a deep dive over the weekend, maybe even later tonight. Start looking into MEXC and some of these other ones. Because I'm not interested, but I need to like do some due diligence. Like the other five, like top five, I mean, they're as good as FTX until they have an FTX moment, right? The things that I look for, that would be against that is if, Alameda Research, as an example, being, directly tied to FTX and they were just losing money and hemorrhaging money and a lot of their stuff was in high risk shit. Because somehow, even though they saw the entire information and data on FTX, they still effed it up, which is mind-boggling.
Coinbase?
Yeah,
What is
Coinbase Pro. Coinbase Pro.
Is it KYC needed?
Yeah,
Hey, what do you guys think about regulations in Europe? I have some family in France that I can use, and
they're
trade.
much better in Europe.
Can I use is it okay if I use like somebody from my relatives and open an account on Bybit or BitGet and use it? Is it going to be?
I'm not going to advise you on any of that stuff, bud.
No?
Like that is 100%. Like the problem is.
Because even if they ask for information, they can, she or he can easily support the claim that we are from friends. I just don't know. You're right. If I forget and do VPN, just okay. Yeah, you said that a couple weeks ago. You're right. You don't know the IRS here. Chris can probably explain better. They're just, they're just money thirsty.
Well, yeah, that's the thing. It's like if you are trading in the U.S., you 100% need to declare your capital gains income.
It's not. You don't have to, but one day they will catch up to you. One day,
yeah, absolutely. That's the thing. It's like I don't mess with that stuff. Like you don't mess with tax.
Go on for 2, 3, 4 years without having to claim anything, and you made money, lost money, nothing. But one fucking day they will know.
Well, that's the thing. That's the thing too. It's like what people don't know is that by tax is declaring. It's like, well, did you know that if you have declared losses, you can actually use those losses against your taxes? So you actually claim that and get back taxes for lost income. So like you can actually there's so much you can do if you use the system for you. So if you let's say you lose a lot of money, you can actually declare that as a trading loss essentially. But then then you're declaring capital gains on anything you make, but it essentially reduces your tax burden.
Offsets it.
Yeah. So there's a lot of ways you can do with it.
I think I am from 75 to about $65,000 down. So yeah. Everybody fucking pay tax. If one day I'll send you me and my wife's tax returns when we file, and you see how much we fucking pay for tax. I think I pay 3 or 4 times more than you for sure. Yeah.
Norway has one of the highest tax brackets in the world. Even in Sweden, minimum wage in Sweden pays 30% tax on income. Yeah.
50%?
Yeah,
Yes, sir. Yes, sir.
you do get a lot. You do get a lot of good stuff off of it. Like plus, Norway's super rich. Norway has like a public fund worth trillions because of the oil.
Because they take care of their citizens. They want to take care of their citizens.
Yeah.
Hey, did you guys know? Well, this is off topic. Biden is running again in 2024.
Interesting.
Only my wife that wants to go to Europe. If only my wife. I do. You know that. You know, I told you that a long time ago. I wanted to get out. I was gonna get out this at the beginning of the year, but it didn't go out.
If they're still there or not.
Wait. Yeah, the system here is non-existent. I don't know. It's not me. It's a family thing. If it was up to me, you know, I would be somewhere in Bordeaux right now. And that's where I have family. You know, at least I have some bloodline down there. I fucking Well, the same. Yeah, this is gonna deviate into a yeah. It's the same issue that that I kept. I want to live next to my family. She said if we go to France, then I'm gonna be away from my family. So it's kind of catch-22. So that's why I'm kind of riding it along.
No. Oh yeah. Well, I mean, yeah.
No, I what do you think of like Saudi Arabia or Dubai in general?
I wouldn't live there, but
You wouldn't?
no, I wouldn't live there, but I would visit. It's very business friendly if you want to set up like a remote business like what we're doing, but at the same time it's like it's definitely not a place where I would live. Like you don't they don't mess around with the rules, so to speak. There's a lot of wild stuff that goes down, and there's a very clear like elite class. Like it's basically like you have a massive amount of like very poor people in those countries, and like the elite, like the top percentage, like they basically live like gods, and they do whatever they want to anyone they want.
Trillions and trillions of dollars assets. You're right. No, just
Yeah,
because my wife is a travel nurse, and there is this work contract Riyadh in Saudi Arabia, um, which is they offering 3 times of what she makes here. Fuck that. No, that's not how it works. If I go there, that's not no. I don't think they enforce and implement that stuff. It's not the 80s anymore. Like those people are just
I don't know, man. Like Hey, guys, I'm gonna call it there for me. I gotta go do a couple things.
Yeah, I mean, I've never been there. I don't watch the news there. I was just, trying to see where else to go because, I'm just sick and tired of this. If it's not a third world country, that's for sure. You'd worry about somewhere. But
Well, hey guys, I'm gonna bounce. I got a couple things I gotta run around and do.
thank you.